Hi, I'm Cheryl Hazel with Realty 100, and I am here today with Peter Denning, who is a mortgage broker at Newfinity Group in Palm Beach County. Today, we're going to have a discussion about everything you ever wanted to know, maybe about loans, contract negotiating, and more. So let's jump right in, Peter. There's a lot of talk right now about buy downs. Can you explain how that works and when it might make sense for a buyer?
Absolutely. And first and foremost, Cheryl, genuinely appreciate the invite to do this with you here today. And I'm looking
Yeah.
forward to get some questions answered and learn about your business as well. But buy downs are becoming more and more popular as we move from the seller's market towards, I say towards on purpose, towards the buyer's market. Some sellers out there are noticing that they're reducing price. Their house is staying on the market a little bit longer, not getting as many offers as maybe they used to, but still able to sell their home for a nice price. So what a seller concession does for a buy down is it uses that dollar amount in the concession to purchase your interest rate down further than whatever your going rate is. So the example would be if someone's at 6.5% and there's a $5,000 seller concession, they can use that $5,000 of a seller's concession towards buying the interest rate down. Now, you could buy it down permanently or you could buy it down temporarily. And whether you do it temporary or permanent is really a case-by-case scenario. But the permanent situation would be you take your seller's concession, whatever dollar amount it is, within the guidelines, and you just apply it directly towards purchasing your interest rate down permanently. And the other side is if you want to do it temporarily, where maybe customers saying, well, I'm going to refinance in 2 to 4 years anyway. That's my goal. I'll do a 2-1 buy down. And in that example, if the customer's rate 6.5%, they'll be dropped all the way down to 4.5% for year one, 5.5% for year two, and then at year three would go to the original interest rate of 6.5%. So it is a case-by-case scenario on how they utilize that seller's concession. But for the 2-1 buy downs and the permanent buy downs, they would need to come from a seller's concession in order to accomplish that. And I've always, prior to this shift, I've always been curious about seller concessions because, why not, right? The seller is going to make a bunch of money. They're motivated to move for whatever reason. And if they're not getting as many offers, why not, just use it as a negotiating tool to get yourself to the closing table. So can you maybe tell me a little bit about what a seller concession is, and if there's any other items that a seller can use to benefit the buyer that might need some help getting to the closing table?
Yeah, absolutely. Well, seller concessions weren't really something we've been seeing in this market that we're just transitioning out of, but they will be more important as we go forward. They can be things like the buy down that you just mentioned. Also, closing costs, that is probably the most common seller concession, which can be 3% to 6%, depending on the type of loan product. And a home warranty, often that is a desirable thing for buyers, possibly a termite bond. Florida is either the first or second highest termite state. And then once we get through the inspection period, we do more negotiating in terms of either reducing the sales price, offering more in closing costs if there's still room, or repairs. So those are the typical concessions that a seller might make in a contract.
So when you get yourself into contract, even after attorney's review, during the inspection process, there could be some negotiating, and there could be some things that come up in the inspection or something like that, where the seller can say, okay, I'll fix this, or we'll credit a couple $1,000 for whatever it is that needs to be fixed or what have you.
Right.
Okay.
Right.
Understood.
So before I start showing homes, I get my buyers connected with one of my trusted lenders like you
Mhm.
to start the approval process. How do you determine qualification for a mortgage payment if the buyer doesn't know yet a specific home, so they don't have the property taxes or an HOA amount or even homeowners insurance for that property?
Sure. So when it comes to getting approved for a mortgage, there's really three really important items that are taken into consideration, and it's your credit score, it's your income, and it's your down payment, right? And the stronger you are in all three of those categories, the less risk there is for the bank to take on the loan. Now, when I'm introduced to a client for the first time, I always want to understand as much as I can about each of those three categories to see
Mm-hmm.
how strong their application might be. Ultimately, debt to income ratio is where we're going to start because I could work with credit and you can put down as little as 3%. Obviously, higher the credit, better options, higher the down payment, better options. But your income is something that we truly need to talk about. And just for an example, if someone makes $10,000 a month as a family or as an individual, that's $120,000 a year. So the bank is going to want to look at your monthly obligations. And I use that number
Right.
because it's very easy to work with. So the bank will lend up to 50% on average to the borrower, right? Of what's on their credit report. And what I mean by that is all of their existing debt, including the new mortgage that they're going to obtain. So your car, your monthly car payments, your monthly credit card payments, any personal loans, student loans, things that you have out there. So in that example, the bank is going to say, we want to know that all your payments, including your new mortgage on your credit report, are going to be within 50% of your income. And like I said, that's just a guide. We can go higher, we can go
Yeah.
lower. And then the other things that come into play down here in Florida, which is important, is your homeowner's insurance. It could
Mm-hmm.
be costly and, it could be fairly cheap depending on what part of the state you land in. But
Mm-hmm.
that's a piece of the equation that you need to be very upfront with and
Yeah.
ahead of the game on, because that could absolutely infringe on a customer's debt to income ratio. But usually
Yeah.
I'll
And
give
it's
an
very
example.
important.
Go ahead.
Yeah, I was just going to say it's very important, to try to find a comparable property so that they can know that this loan approval is solid based
Right.
on some hard facts.
And that's usually where I start, right? And it tells me the urgency of the customer. Do they need to move in the next,
Mhm.
3 to 4 weeks? Or are they,
Right.
truly being prepared for the next season? And I'll find an example of, a house that they agree on that they would normally make an offer on if they were ready. And I'll price out that home for them in today's market and say, this is what you'll have to come up with escrow. This is what your homeowner's insurance portion is, your taxes and your HOA.
Mhm.
And if I come to you, Cheryl, with a pre-approval, you're going to know that that's coming to you from verified documents, more than
Mhm.
likely running AUS, which is an automated underwriting system through Fannie and Freddie, to help understand the strength of the borrower. So it's important to go through
Yeah.
all those items before you start looking at the homes for sure.
Very. Yeah.
Very interesting. So now, other than price, when someone's going to be making an offer to a seller, what elements of their offer, like I said, besides price, will make that offer
Mhm.
stronger, maybe than some other offers coming in?
Basically, just the major offer points, which would be a bigger escrow deposit, because the bigger the deposit that you put down in terms of the contract, the more serious the seller perceives your offer. Also, a good real estate agent is going to contact the seller's agent before they write an offer and kind of do do a fact finding mission and figure out what's important to the seller, whether it's all about the sales price, whether it's about the closing date because they need a lot of time before they can get out, or what it is. And then that information can be used in negotiating the contract on behalf of the seller. um, So obviously the fewer seller concessions that you're asking for would be more attractive to the seller as well. Like we talked about, the buy down or, help with closing costs, any number of other things.
Okay.
Also, their financing, as we talked about. So the financing needs to look as strong as possible. And that's where, a good lender comes in, because as a realtor, we want to know that once we get the information from you, that you have done everything that you can to prepare that buyer to be able to get to the closing table. And then finally, just a larger down payment, in financing, which isn't always possible, but working with a lender who, crosses the T's and dots the I's is going to be huge, for everyone concerned to get to the closing table.
Okay. And as a
So
buyer,
speaking, oh,
oh, that's okay. I was just gonna say, as a buyer, they can always reference like the seller. Doesn't the seller have to put something in the contract that shows, like seller disclosures, some things that they're going to disclose up front,
it's
or is that
not
not?
mandatory in Florida. It's nice when you get that,
Okay.
because they are signing and attesting to the honesty of that information, but it's not always available to us. And so we have to rely on, a home inspection, which is critical
Yes,
to the purchase process.
of course.
So speaking of financing terms, in the contract, um, what are the most popular mortgages that you offer? And then can you also speak to, especially in terms of working with a realtor, why it's important to use a local lender?
Sure. So to answer the first question, there are, dozens in regards to, the types of mortgages that are out there. Your most common are, the ones that are going to be backed by Freddie and Fannie, your conventional mortgages. You have your FHA, your VA, jumbo, and, working as a mortgage broker, you had, mentioned my title earlier, gives me access to multiple lenders throughout the entire country. So my company
Right.
signs up with multiple lenders, and we have access to some of the largest ones in the country doing the most volume, and we have
Mhm.
access to some wholesale lenders as well that might have a stronger focus on some niche products. We know that there are some underserved communities that might not have access to the information they need to obtain a mortgage. We know that there are people who don't show as much income as they make and are cash heavy. So there are wholesale lenders out there who are available to utilize for the mortgages that are going to get done that aren't going to fall under your traditional circumstances.
Right.
The small business owner is just my perfect example. It's not
Mhm.
the only example by any stretch of the imagination. You could be a retiree living on Social Security, but you're having in cash because you sold a house and you're just renting for the last several years. So anyone that's cash heavy, but not showing much income, can benefit from some niche products out there through some of the wholesale lenders. In regards
Right.
to being local, I work right out of Palm Beach County. I network often, 2 to 3 times a week at least, whether it be virtually or where, I met you originally in Lake
Mhm.
Worth. And, the idea of being local for me is just to be accessible.
Mhm.
I like to partner with my realtors when they get a listing. I like to make myself available at their open houses. And when buyers come in, if they're really serious about making an offer, if they don't have their financing in order, having someone like myself available at the open house could be very valuable because things move quick. I mean, if someone comes prepared with their
Right.
documents, I could sit there at the kitchen table with them with my laptop, get them pre-approved in, under the hour. And next thing you know, you might have an offer out to you from that buyer
Yeah.
on the same day. So it's valuable. And obviously also available through Zoom.
That's
But
awesome.
even after you make your offer and you get into contract, you want your lender available for you, especially in the
Yeah.
in crunch time. You definitely want them to be available.
Quick question on
Yeah.
excuse me, on the business owner. I know there used to be such a thing, but do you have products available that just look back on 1 year of tax returns as opposed to normally two?
Yeah, so usually it's two. What I would tell you, the alternative to that though is typically your bank statements, right? So
Ah, gotcha.
a lender will use bank statements as opposed to tax returns if the income
Mhm.
is not there to support the request. Each lender does
Gotcha.
it different, so I'm not going to sit here and talk about how they do it, but ultimately they'll
Right.
just look
But
at your
it's an
deposit.
option.
They'll look at your deposits each month over the last 12 months.
Hmm.
So they could ask for 24 if they want. And they'll
Hmm.
determine a cash flow for the business based upon how much income is coming in and how much, with the deposits on the bank statements. So that's a way to kind of get
Okay.
around the tax returns for some of the lenders.
Good to know.
Mhm.
So since loan approval is the pivotal piece of the offer to purchase, let's talk about that for a minute. Um, would you talk about locking the loan, how long it can be locked, and if the buyer is able to obtain a lower rate if the market drops during the lock-in period?
Sure. Um, So the answer is yes, right? You get yourself locked in on time. If you need to pivot and there's, a better offer with another lender or even with the same lender, there's ways to do that.
Okay.
You typically want to lock in once you are under contract and past attorney's review, right? And once you're past attorney's review, depending on your closing date, we'll have an honest conversation and say, do you want to let the rate float for now and wait, based on market conditions? Or do you want to lock in? You could lock in for 15 days. You could lock in for 90 days. You could lock in
Hmm.
for more than 90 days if you want. Then, there just starts to be a cost associated, which may or may not make sense for the buyer.
Right.
So in my role, if we're in a decreasing interest rate environment, which I don't know if we are yet. I guess we had a nice, some nice relief in the last few weeks. Whether it
We can
stays like
hope.
that, we'll see. Um, but I'll always fight for the best rate for my customer. And just because they're
Hmm.
locked into one doesn't mean that I might not necessarily be able to get them a better rate with the same or another lender at the end of the transaction. But it can be sticky when you start to try to go into something else after you're locked in. So it's
Right.
important to do that very intentional and making sure
Hmm.
it's aligned with your original goal. If you could lock in
Okay.
and meet your original goal, then there really should never be a reason to, try to unlock yourself, for lack of a better.
Right. Gotcha. So, how long does the loan approval process take? And in this market, how long is it going to take to close?
Yeah. So
I mean,
from
that's always important for a realtor to know when I'm writing the contract because we have to project, if both parties want to close ASAP, we have to project that date. So, that's another reason why it's important for our line of communication to be good so I can, be checking in with you along the process.
you know,
And
I,
as a local lender, that's huge for me.
of course. And what I'll tell you is it's quick, right? It's quick. So as
Mhm.
long as I am doing my job and the buyer is responsive, right, with their documents, and if we need to close quick, you can close under 20 days, sometimes under 15 days. And when that happens, it's usually because everything just fell correctly, right? So,
Right.
but ultimately, our underwriting for the loan should be done within a couple business days, 2 to 3 business days at most. And
So
at
the
that
time
point,
that takes the longest is like the title,
correct. That is correct. So
probably.
usually, we're waiting on title and appraisal, and then, the final crossing the T's and dotting the I's from the lender when everything's in. But mortgage commitment, couple business days and we're ready to go as long as appraisal and title come back in a timely manner. Now, if I'm waiting on pay stubs or a gift letter or something like that, that could ultimately hold up the mortgage commitment. It doesn't necessarily mean that they're less qualified. It just means that the bank still hasn't received from the buyer the required documentation to validate what they're stating they have. So that's where that pre-approval process comes, and it's really
Right.
important. You can't just slap a pre-approval together for somebody and think it's going to get them to the end of the road there.
Right. So with the time that
I think,
we
did I lose
have
you?
left, oh, can you hear me? You can't hear me? Oh,
You're back.
hello?
Yeah.
Oh, okay. I don't know.
All right. Yeah,
Technology.
it froze for a little bit, but you're back.
Oh, sorry.
No, that's okay.
Um, so we're running short on time, I think.
We still have a little bit
Um,
more. That's good though. We can move on to the next topic, I think.
okay.
Yeah.
Yeah.
So just the approval process, call it under 20 days. I'll have you underwritten 2 to 3 business days, maybe 1 or 2 days difference in that. But within the first week, you should know that your mortgage commitment's coming to you.
Awesome.
Um, but now in regards to we talked about for sale by owners. So can
Yes.
you explain to the for sale by owner client why they should list with a realtor as opposed to going into the transaction by themselves?
Yes. Well, statistically, homeowners who choose to sell for sale by owner actually make 26% less than if they use a realtor. So that's definitely a number to play with.
Mhm.
Then I always think back, my dad was a dentist, and I remember asking him at some point, well, why don't you just like do, not selling his house, but something, why don't you just do that by yourself? And he said, well, because I'm really good at what I do and my time has value. So why am I going to try to figure out how to do something that I don't do every day when there are professionals out there who do? So I'm just going to hire it. And I think that's a sage piece of advice, because I do this every day. I know what I'm doing. I know how to write a contract. I know how to negotiate. I know how to help people, with kind of pre-staging. I know how to find houses. Like, I have a whole skill set and 18 years of experience. And for buyers, my service is free because the listing agent negotiates a brokerage fee with the seller right up front. So that is actually in writing and not necessarily negotiable. A lot of buyers think they can just, if they don't have an agent, they can negotiate, with the seller off the brokerage. And that's not always the case. It
Yeah.
really depends on, the listing agent. Also, just real quickly, home security, that's a big issue, especially nowadays. Do you want people who aren't really looking to buy your house to be wandering through your house and kind of
Hmm.
casing it for a burglary later? Whereas if you're working with a real estate agent, that person is in the company of a licensed real estate agent.
Right.
Also, screening qualified buyers, professional photos, copywriting, using the best marketing nationally and internationally, which is what I do, negotiating skills, and really just a buffer between the seller and the buyer. It just takes emotions out of it and makes it more, transactional.
No, and I completely understand. Even as we're running short on time, I have an example. A customer of mine up in New Jersey had her house up for sale on her own, accepted an offer from somebody. They claimed to put, 6 figures down, and they were going to let her stay there for as long as she needed to, a couple months, what have you. And within 2 weeks, they were able to back out. They had no deposit up front. And long story short, she used a realtor and she got about $25,000 more than her list
Mm,
price, not even what she
nice.
accepted from the original.
Yeah.
So it worked out really well for her. So there's the
Yeah.
benefits are there, and I felt it with that example
Well,
for
and
sure.
and I definitely feel, even if people want to start out for sale by owner, and certainly that is their option, they at least need to have a good lender in their corner to, screen and qualify buyers, because
Yeah.
you just don't want to get down the road and figure out that it's just going to fall apart.
Yeah.
So,
And to that point, I do, from a outreach standpoint, I'll look up for sale by owners and I'll reach out to them via email or text if their
mhm,
contact information is there, because I know that they're the ones that are technically, probably just trying to avoid that seller's agent fee. But if
right.
we need to know who's making an offer, I'll join them at their house if they want to have an open house or what have you. And
Yeah. Yeah, that's
because they're
important.
working with me, I can make a referral if it, if it isn't working out for them quite well, from on the
Right.
listing. Uh,
Well, I think that, what sellers need to understand is that there are really three things that control the sales process. It's the pricing of their house, the condition of their house, and the marketing that's done. And ultimately, they are controlling price and condition. The realtor controls the marketing, and typically a for sale by owner does very little marketing. So right away, they're
right.
starting, sort of behind the eight ball, if you will.
Mm-hmm.
Yeah.
We got time for one more quick one.
Sure.
All right. What are the most common mistakes that lead to a seller reducing their list price after it's been on the market for some time?
Um, well, as a realtor, I do everything I can to avoid that situation. And getting it right at the start of the listing is crucial. And so for the seller, that is really going to be about price and condition. So if they have any concerns about condition, I would suggest a pre-listing inspection, to maybe get some things fixed. Maybe, a stager who can
Mm-hmm.
help them decide what to edit from the house, because really condition is everything. And what I tell people at a listing consultation is that we don't live in our house the same way it's going to be when we go to sell it, and we really need to think of our home, um, like how we feel when we walk into a model home and everything is clean lines, uncluttered. And when you walk into a model home, you're just like, oh, it's so beautiful, and you notice the furniture and you notice the accessories. And so make your home feel that way, and
Right.
then it will sell quickly. So anyway, we need to wrap it up. I want to thank you so much, Peter, for joining me. It's been great sharing our collective knowledge, and hopefully we have exhibited our competence and knowledge and expertise here today.
I hope
And
so as
so I'm
well.
gonna, yeah, and so I'm gonna throw up our cards. I'm gonna share a screen real quick so people can get our contact information.
There it is.
Yeah, there it is.
Great.
So again, Peter Denning, mortgage loan originator, who is, with a brokerage to help you. And I'm Cheryl Hazel with Realty 100 and allhomesinSouthFlorida.com. Thank you again, Peter.
Thank you, Cheryl. I hope to do it again.
Absolutely. Have a
All
great
right.
day.
Very good. Thank you.